Hello guys, this is Mr. Song. Welcome back to my channel and welcome back to another lesson. Let's get started.
Hello guys, today I want to quickly talk about one of the topics from A-level business, which is cash flow. And I will use this example from Premier Hotel cash flow table to look into how do we calculate cash flow tables and how do we actually interpret a cash flow table and how do we look into any changes or amendments in the cash flow table. Now let's get started. Firstly, we want to look into all the items on the left listed in the table. As we can see, there is cash inflows. So below cash inflows, we have all the specific items for cash inflows, and then we have total inflows. Same thing, we have cash outflows and all the specific items, and then the total outflows. At the bottom of the table on the left, we've also got net profit, opening balance, and closing balance. So all those items, they will normally be given to you in the cash flow table. So let's quickly talk about what are the cash inflows. So basically the money coming in, the cash coming in to your business will actually call those items cash inflows. So very common ones are owner's capital, bank loan, and all the sales you've made from your business. Doesn't matter if it's cash sales or credit sales. So all those money coming in, we call them cash inflows. And if you add all of them together, the total will be the total inflows. That's how we calculate cash total inflows. The same rule applies to cash outflows. The very common example for cash outflows including wages and also utility bills and other expenses. So all the expenses, which means the cash and money going out, we call them cash outflows. When you add them up together, so we'll have a number that will be our total cash outflows. So now you know how to calculate total cash inflows and total cash outflows. Then the next step, we need to calculate net profit. So if you're thinking about profit, the simple formula I gave you is actually using total inflows minus total outflows, which means the money coming in minus the money going out. So the difference after you calculate your inflows and outflows, that number will be your net profit. So based on different companies and different nature of the company and how they do their sales, every month you might have a minus net profit, you might have a positive net profit. It doesn't matter if the number is positive or negative, we also need to calculate that number and put into the net profit section. Well, one thing we have to bear in mind is if the number is negative, we need to put the number in the bracket, which I put in bold in February and March net profit. So we don't want to just put a minus sign in front of the number, we want to actually put them in the bracket. Okay, next thing after net profit is the opening balance. So normally in the cash flow table, the first month on the table, the opening balance will normally be 0. And then when we calculate our closing balance, we simply use net profit plus opening balance. That will be our closing balance. And from first month moving on to the second month, your closing balance from the first month will be automatically becoming your opening balance for the second month. As we can see in the table, in January, the closing balance is 650. So this number will be the opening balance for February, okay? And we'll follow that rule month by month. Now, if we look into the numbers here, for January, February, and March, if we add up all three cash inflows, the total number will be our total cash inflows. So let's just use January as an example. If you use 1,000 plus 500 plus 200, the total cash inflow will be 1,700 in January. Okay, so same rule applied to February and March. Now, when we calculate cash outflows, we basically do the same thing. We add up all the cash outflows. Let's also use January as an example. We use number 800 plus 100 plus 100 plus 50. The total outflows for January will be 1050. Okay, so the first two steps are pretty simple. We basically just add up all the inflows and add up all the outflows. Now, when we calculate net profit, if you remember, we use inflows, total inflows minus total outflows. So in January, the total inflow is 1700, the total outflow is 1050. So we simply use 1700 minus 1050. So the net profit for January will be 650. And when the opening balance for January is 0, we basically use 650 plus 0 will be 650 still. That will be our closing balance. Okay, now for February is a bit different because when you have your total inflow and total outflow, you realize your total inflow is smaller than your total outflows. If you use 1000 minus 1010, your net profit will be minus 10, which we put in a bracket. Now, when you trying to calculate the closing balance, the formula is using net profit plus opening balance. So we use minus 10 plus 650. So our closing balance for February will be 640. Okay, I'll leave March because I feel like if you know the rule how to calculate, you basically know how to do it for each month. One thing I want to stress about is actually at the bottom of the table, I put a small sentence there because I feel like most students, you can actually learn how to calculate inflows, outflows, and net profit, closing balance, and all that. Sometimes they might have to change things around in the cash flow table. For example, when you look at amended March, the number already given to you, but if you look at the sentence at the bottom of the table, it was saying, amend the cash flow forecast to show the impact of a £700 more food and beverage sales being received in March. Okay, let's just assume in March, Premier Hotel, they're actually making more money from food and beverage department. For example, they might have another banquet holding in the hotel, so they get more sales from food and beverage department, right? What we have to do is actually we need to amend these specific numbers according to the item. So we can see in the cash inflow items, food and beverage sales is one of them. But originally for March, for example, the 1st of March or the first week of March, we only made that much sales in food and beverage. But by the end of March, we made another 700 on top. So that's the change we want to put into our cash flow table. So we simply use 100 plus 700. That's the new sales for food and beverage. And that's the number we need to change in the cash flow table. Once you've changed your inflow number, your total inflow number will also change. And accordingly, your net profit, your opening balance, and your closing balance, they might have a different number too. So what I did in the table, I actually highlight every number changed in the amended March cash flow section in yellow. So you can see if in the exam you have a similar question and also they ask you to actually do another column for amended cash flow table. So you should also be able to change the numbers and try to have an updated version for a specific month in that cash flow table. Okay, so now I think that's pretty much everything I want to talk about for cash flow, this topic in A-level business. So I hope this short video will be very useful to you. And if you have any questions, please let me know. I'll try to do more recordings in the future on different A-level business topics so you guys can go back home and watch them and do your own revisions. Thank you for watching, And I do hope this lesson will be very helpful to you and also you enjoy watching it. And I'll see you next lesson.